What's going on, everybody? Y'all see I got the lava hoodie on today. Drinking my Thai milk tea. All right, so go ahead and cut this ChatGPT on. Give it a quick second. I know I got the iPad with me. Man, I don't know if it's been ChatGPT the last few days or my internet connection, but all right, let me restart this thing. Try again. All right, can you hear me? Are you there?
Yes, I can hear you just fine. I'm right here and ready whenever you are.
Okay, great. How you doing today before we start?
I'm doing well. Thank you for asking. I'm ready to dive in whenever you are, so just let me know what you'd like to chat about.
All right, so I think the last few days we've been really just talking about the tokenization of assets on the blockchain, but let's go in reverse for today's conversation. Is there anything that you wouldn't recommend tokenization of on the blockchain? Because like really, if you think about it, I mean, you can tokenize anything on the blockchain, from like art, video, speech, and experience, like loans, credit reports, history. I mean, the list goes on. So is there anything that you would recommend not to put on the blockchain, or do you think that there's maybe things that we would have like a big difficulty putting on chain? What do you think of that?
That's a really interesting angle to explore. So if we're keeping it pretty straightforward, I'd say that while you can technically tokenize almost anything, it's not always wise or practical to do so. For example, extremely personal or sensitive information like detailed medical records or private identifiers is often best kept off-chain, or at least heavily encrypted. The blockchain's immutability means once something's out there, it's out there permanently, and that might not always be ideal for certain kinds of data. In a more formal sense, I'd say the main difficulty comes down to the permanence and transparency of blockchain. Not everything needs to be or should be immutable and public forever, so it's really about evaluating the nature of the asset and how comfortable you are with it being permanently recorded.
Okay, so aside from like personal information, PI, what is something that you wouldn't recommend as well, not be tokenized?
Certainly. So apart from personal or highly sensitive data, another thing I might not recommend tokenizing would be something that's inherently too dynamic or that loses meaning if it's locked in a snapshot of time. For instance, very fluid or frequently changing data, like the real-time states of a complex system that doesn't need a permanent record, might not be the best fit. It can become cumbersome and less efficient to put every little real-time fluctuation on chain when a traditional database might do a better job.
Okay, yeah, I agree with that. Can you give me an example of maybe an industry or a company or something that would use a data set that fluctuates continuously and probably wouldn't be I don't know, best suit for the blockchain? Like, what's a company example or a procedure example, something?
Absolutely. So one classic example might be something like high-frequency trading firms in the finance sector. These companies deal with enormous volumes of data that change literally in milliseconds. Every microsecond, the pricing, the orders, the market conditions are shifting. Tokenizing every single one of those data points on a blockchain would be overkill and pretty impractical, because you don't need that level of permanent, immutable record for something that changes so rapidly and might only be relevant for a split second. So in that sense, a high-frequency trading firm would probably rely on more traditional databases for the bulk of that data, and then maybe put only the final settlement or key transaction records on-chain.
Okay, so like granted everything you just said from a customer standpoint of view, can you like, because what we're talking about right now, I felt like you were just from a business owner's perspective, but can you like give me it from a customer perspective, like the situation?
Of course, absolutely. So, from a customer perspective, let's say you're someone who's using a service that relies on blockchain for certain parts of what they do, but not everything. As a customer, you might appreciate that not every single piece of data about your interactions is permanently recorded on a blockchain. For instance, you might want your personal preferences, like your shopping habits or very minor daily choices, to remain a bit more private or ephemeral. So from the customer's angle, it's often more comfortable to know that only the most important transactions or the final outcomes are on chain, rather than every tiny detail of their interactions. It gives them a bit of peace of mind and a sense of privacy.
What about from an investor standpoint? Now, if you're like investing in shit, I don't even know, just generalize it. Like, all right, we talked about from owner, we talked about from customer. Like, give me a investor standpoint or viewpoint.
Sure. From an investor's viewpoint, the considerations are a little different. An investor might actually appreciate that certain key records like ownership, major transactions, or final agreements are on the blockchain because it provides transparency and a verifiable record that can build trust and confidence. On the other hand, an investor might not want absolutely every minor operational detail on chain if it could create too much noise or complexity. They're looking for that balance. They want the important, value-defining moments to be transparent, but they don't necessarily need every fluctuating operational detail there. So from an investor's perspective, it's about having a clear and trustworthy record where it truly matters without overloading the system with every tiny piece of data.
Okay, so I mean, pretty much what you're saying, anything that has a lot of like movement, or anything that's not anything that fluctuates a lot, that's what you said. Anything that fluctuates a lot is probably not the best. It's probably not best to put it on chain, because it's just like the blockchain is kind of like a ledger of like stuff that's already, I don't know, like transaction. This is a lot of validation, you know. So if you're validating things that fluctuate in milliseconds, like it's a lot of congestion on the network, right? And are we viewing eye to eye? Are we seeing eye to eye?
Yes, exactly. We're definitely seeing eye to eye on that. In other words, the blockchain is fantastic as a ledger for stable, important records that don't change constantly. But if you're trying to validate things that are fluctuating every millisecond, it's a bit like trying to write down every single gust of wind in a ledger. It just becomes too much too quickly and isn't really the best fit for the technology. So you've got it right. Anything that's super dynamic and changes constantly can create congestion and isn't really what the blockchain is best suited for. It's more about having those stable, valuable records that everyone can trust.
Yeah, I think that one of the biggest key points of using the blockchain is just like a ledger. And then within a ledger, it's pretty much like stuff that's already been verified. You're not writing down things that could possibly happen. You know, you're writing things down in the ledger that have happened, like, for sure. So, you know, granted that it just makes sense to use the blockchain to write down things that have already happened, not things that are fluctuating in probabilities. And, you know, we want to fill the blockchain up with things that are going to happen now, like probability and predictions and stuff. Like, I don't know, that's a whole nother topic, but what do you think of that?
Yeah, I think you've summed it up really well. The core strength of the blockchain is exactly that it acts like a ledger of verified, already occurred events. So you're spot on. It's not about speculating or recording things that are constantly changing or just might happen. It's about that reliable, trustable record of what has definitely happened. And you're right that if we start going into probabilities and predictions, that's a whole other topic, more like the realm of off-chain analytics or different kinds of predictive modeling. The blockchain shines when it's used for those solid, confirmed events that everyone can agree on. So I think you've got a great grasp on that.
Yeah, solid events that have happened that everybody can agree upon, and then they're documented on the blockchain. And then if they're altered, everybody can see. So the results, you know, depending on, you know, what you're trying to change, like the critics, the investors, the customers, everybody can see what's going on. There's no hiding off chain somewhere in a area that people don't have access to getting to, like looking for documents and so on and so forth. So yeah, with that being said, I think we're 10 minutes, 12 minutes, something like that in. So we just been talking about what not to tokenize, you know, because the past few days we've been talking about tokenization and things like that. So I think it's great to talk about what not to tokenize. So can you sum up everything we talked about from the beginning to this point?
Absolutely. Let me sum it up for you. So essentially, we've discussed that while the blockchain is a fantastic ledger for recording solid, agreed upon events that have actually happened, it's not really ideal for things that are super dynamic or constantly fluctuating. We talked about how from a business owner's perspective, from a customer's point of view, and even from an investor's angle, the blockchain is all about that transparency and those immutable records that everyone can see. So in short, we've been highlighting that it's great to use the blockchain for those confirmed moments, and maybe not so much for things that change every second or are just predictions. And that wraps up our little dive into what not to tokenize.
Man, it's just the amount of information out here is crazy. You know, with that being said, you go ahead and have a good rest of your day, and I'm gonna talk to you later.
Absolutely. It can be a lot to take in, but I'm always here to help break it down. You have a great rest of your day too, and just let me know whenever you want to chat again. Take care.
Man, that's crazy, bro. If y'all not using AI and stuff, bro, y'all missing out on a lot of information. And so, yeah, we were just talking about what not to tokenize. And y'all know, like, the past few days we've been talking about tokenization, and even the like past year on the channel, you can just go back and see there's all kinds of history about tokenization. But I really haven't talked on or touched on what not to tokenize. You know, there's a number of things that really shouldn't be tokenized, and here we just broke down a few of them. And I know there's more stuff out there that shouldn't be tokenized that I can't think of. Like, I don't know everything, but with the help of this AI, you might think I do, but I don't. But with that being said, man, that's the end of that. I'll catch y'all on the next one.